Good morning, everyone, and welcome to the European Crossover webinar. And we're seeing a little bit of a mixed bag this morning as we come into the webinar. We have seen the euro come off of its lows from yesterday, but also in equities. We saw the market just continuing to ramp higher yesterday during this time, and then in the U.S. session, we pushed a little bit higher, and then we broke lower. Then in Asian session, we pushed a little bit high off of those lows, and we broke lower, and kind of like a little bit of a mixed bag, to say the very least. We'll go and take a quick look into that area. So you can see we continued the assault upside coming into the U.S. session, and then we came off quite a bit. And then we bounced a little bit back in Asia. We're just kind of like in the middle of the road in it. Obviously, an incredible amount of volatility that we've run into when you just take a look at what we've seen already here in the just in the SPOOs. You know what? On Friday we saw that the market try and make another dip, and then saw this jump back. And then in the Sunday session in Asia, we jumped. Monday took it to another level. Then Tuesday we really rallied up, and then kind of back and forth, and potentially we could have even gone even further. We're looking here at the NASDAQ. We thought we might even make it all the way up to 83.47. Looked pretty close, wasn't that far away. All it took was one more lunge, and then we saw the market really come back in. Doesn't look like it from here, but we have, seen quite a bit of volatility here as we've made or come up toward these levels. Certainly here in the SPOOs also. There we go. And certainly we've seen the move mirrored out here in crude oil, and we'll take a look at that. You can see here we started the session down here at 24 before we saw a decent little rally up to 25, 26, only to see this market give that up and fall back towards the lows, kind of bounce back up. Crude's really been all over the board with concerns on the OPEC meeting coming up. And then, of course, I'll look here into the gold market. We saw highs that took us even above 1,700, nearly almost up to, 70, well, not that far away from 1,750. Before we've seen a pretty good give back here in the crude oil market, gold market, I meant to mention here. So really at the beginning of last week, I think it was, we saw the gold market trade in a very tight range. Look at this here. Before we really started to see some movement. You can see here how quite the market was trading. And boy, we've really taken off in here. But after rallying all the way up above 1740 in the June gold, bit of a surprise to see it come off that much. I mean, holy smokes, can you imagine that? We've had already come off well over $60 in short order. With that, we'll go and take a look here on the economic calendar. You can see nothing in here until we get into, we do have Mexican industrial output at 7 a.m. Eastern. Once again, just to remind, I'm in Texas, so it's Central Time for me, so an hour difference. So when you look at this at 6 a.m., yes, 6 a.m. Central, but it's going to be 7 a.m. Eastern. So Mexican industrial output at 7 a.m. Eastern, as well as Canadian housing starts at 8:15 Eastern, and building permits at 8:30. Nothing I see here in the U.S. data. With that, we'll go and move into FX. Okay, let's go and take a look at the news, and then we'll jump right into the analysis. I do see here German IFO, German IFO economist recession is making itself felt on the labor market. I think it says there's some other details in regards to that from the IFO economist. Well, let's go and move on. Dollar firms as virus worries return. The dollar found a footing on Wednesday as investors returned to safe havens, reversing some risk currency gains made on hopes of the coronavirus crisis in Europe. New York was slowing. The greenback rose on most majors a day after suffering its worst drop against a basket of currencies in nearly 2 weeks. It was not enough to recoup the ground given in recent days, but came after a sour in trade on Wall Street on Tuesday. It was a 2-day rally in Asia equity markets as they ran out of puff, so as they say. Like I said, the volatility in equities yesterday was truly palpable, and I actually traded fairly light. As you remember, I sold the market or got short on in the Asian session on Sunday. Ended up staying literally up all night, managing my position. I actually felt pretty good about it overall, and then we came in on Monday and market really opened up blasé, and then NASDAQ started moving much higher, dragged the S&P's venture. I got stopped out, and I traded a little bit more just to stay engaged in the game, made it just a little bit back. Then yesterday just traded it fairly light. I'm kind of happy I did because the extremes we did push on yesterday were quite a bit, and I actually traded on both sides, but very, very lightly. But even yesterday's move, boy, that was really supplies, and I actually think I did myself a favor. Honestly, in a weird way, I think I would have done more damage had I not been stopped on Monday, as the extreme moves that we saw yesterday in this market swung back and forth. I think it really took a lot of people out of the game. So maybe in a weird sense, I think it might have worked out for the best for me. But we did see some wild swings yesterday. That being said, the largest gains came against the risk-sensitive Aussie and New Zealand dollars. The Aussie has now been repelled twice in as many weeks from breaking resistance from the 62-cent mark. It was a 2 steps towards 1 step back situation, Bank of Singapore strategist. Optimism is driven by the sense that perhaps the virus is turning for the better, but markets are really concerned about the extent of the economic fallout, which is just starting to slow up the numbers. The dollar, which for a month was now very close on track for risk appetite as investors and businesses fearing the worst have rushed into the world's reserve economic currency, stood 2/10 higher, 1871 euro. Yeah, these markets are swinging by the headlines. I was surprised to mention that yesterday because this week was supposed to be a pretty difficult week, although it appears on the fringes those numbers aren't. But even yesterday, I saw where the SPUs rallied up like 20 handles because Vice President Pence said he thought he saw numbers kind of, I don't want to say normalizing, I think they were kind of stabilizing, I think is the right word or correct word that he said. And with that, after the sell-off, we saw just on that headline, SPUs rally 20 handles, then give back nearly all of that, then come back again. So it's been really quite the up and down affair. Reuters tally shows 81,451 coronavirus deaths globally and nearly 1.4 million infections. PM Johnson, who is infected, remains in intensive care through those conditions stable. Meanwhile, there are signs of a leveling off of hospitalization in New York and Europe, and there are plans of beginning easing of some of the lockdowns as fatalities have been declining. The Chinese city where the coronavirus epidemic first broke out, Wuhan, ended a 2-month lockdown on Wednesday, although a northern town started restricting the movements of its residents and concerns of a second wave of infections. What we see and hear from Wuhan will be quite important for another or any improvement in sentiment can be sustained, said Ray Trill. There's been keen interest on how the Wuhan residents are to get out and about and hope there won't be evidence of reinfections. Mainland China's new coronavirus cases have doubled in 24 hours and new asymptomatic infections more than quadrupled while the economic cost of the pandemic becomes clearer. Ratings agency S&P Global on Wednesday warned that the cost of combating the virus would weigh heavily on Australian finances and changing the outlook for the country's rating to negative. While the virus curve is flattening, the economic effects of the coronavirus will linger for years, said Commonwealth Bank of currency analyst Joe Capurso. Economies will take time to reopen. Some businesses will not reopen, and unemployment will take years to recover. We think that means that the dollar and yen will re-strengthen. Also, looking back, we've seen a lot of dramatic changes with crude oil also. The U.S. pushes back on call by OPEC to join big oil cutback cuts. Saudi Arabia and Russia and allied oil producers have agreed to deep cuts to the crude oil output, all talks this week. Only if the United States and several others join in with cuts to help prop up prices. However, the U.S. Department of Energy noted in a statement on Tuesday that the U.S. output is already falling without government action, in line with the White House insistence that it would not intervene in private markets. The decline, however, would take place slowly over the course of the next 2 years. Global oil demand has dropped as much as 30%, or about 30 million barrels per day, while Saudi Arabia and Russia and other members of the group known as OPEC have expressed a willingness to return to the bargaining table. They have made the response conditional upon the actions of the United States and other countries that are not mentioned or not members of OPEC. No agreement has yet been formalized. Before any meeting between OPEC and non-OPEC, there will need to be agreements on production numbers for any country that will reduce production. Iran's oil minister Bijan Gareth tweeted on Tuesday, OPEC is due to hold a video conference on Thursday after Trump said last week that Riyadh and Moscow had agreed to cut an unprecedented time to 15 million barrels. With regards to media reports that OPEC will require the United States to make cuts in order to come to an agreement, the EIA report to date demonstrates that already projected cuts of 2 million barrels. After OPEC talks, Saudi will host that conference on Friday for energy ministers from the group of 20. The scale of the challenge is so large that OPEC cannot solve it, said Jason Bordoff, director of Columbia University. Riyadh and Moscow are trying to overcome the rancor stemming from the March talks when a deal to extend production cuts fell apart. Since then, Saudi Arabia has been flooding the market with extra crude. It has insisted it is no longer carry what it considers an unfair burden of output cuts. 3 years of planned productions by OPEC left an opening for the United States to gain market shares that boosted shale production. The U.S. success in growing crude has frustrated members of the production cut pack. U.S. Department of Energy projections now showed U.S. output averaging 11 million barrels per day in 2021, which correlates to about 2 million barrels a day decline. Saudi will, with by far the world's largest reserves of extra capacity and some of the lowest production costs, said it had raised crude output to 12.3 million barrels per day on April 1st. Russian President Vladimir Putin has said any cuts should be made from the levels in the first quarter before Saudi and other hike production. The OPEC source said there's no consensus between Riyadh and Moscow on the baseline for any reactions. The Russian TASS News said that the cuts could last for 3 months starting from May. Anyway, enough of that. Thought I'd just touch that. We had very light news on the FX other than the story I showed you on the dollar. Decided to just cover the crude, but it just seems like just a bunch of repeating of the same story, paragraph by paragraph. So let's go and move on to the analysis. I think the next couple of days will be pretty interesting with, I think we'll see quite a bit of volatility as far as the swings. So the euro rallied on Tuesday, challenging 926 before paring back. Support on Wednesday will be 836. Looks like we already made a challenge to that. Look at that. 836 low today so far has been, oh, 831, not bad. With resistance at 926 followed by 956. So on the upside, 926. Downside 836. Low for today so far this morning's been 831. And with that, we're going to move on to the cable. Cable rallied on Tuesday, closing above Monday's high. You can see that here was Monday's high right here. We closed above it. Not only did we stretch on both sides, pretty good solid action on Tuesday. Resistance comes in at 24.50 with support at 22.63. Well, we're trading in a very, very tight range today. Wow, look at that. Very, very tight. Resistance will be 24.50 with support at 22.63. So the Aussie extended its gains on Tuesday. You see that. Here's Monday's turnabout. There's Tuesday's. Next resistance is going to be 62.30. Well, just like the cable, we're trading in a very tight range, taking a pause here. Next resistance is 62.30 with support at 60.44. Today, the story was when we were reading the news on the in FX was that the dollar's kind of reasserted itself. So after two strong gains here in the Aussie, or you can say the dollar letting up, now it's kind of like dollar reasserting itself after this bounce back. That being said, resistance 62.30, support 60.44 for today. Might be a bit of a pause today where we see a bit tighter range. Still remains bearish despite us coming off these lows. We've really over the last couple of days we've kind of dipped back here. So when you look overall, we're still bearish. For us to turn bullish, we actually have to reclaim 63.03 on 2 consecutive days to turn this thing bullish. Let's go and move into the Kiwi. So and this meant to go and put this here. I don't know why it came up that way. I did correct that on the site, but I remember I accidentally put that on, but it should be the Aussie extended its gains on Tuesday. Next resistance is going to be 60.19 with support. You can see the key level 59.14. So let's go on. 60.19. And 59.14 on the support. We took time out on Monday to detail how we reach these or look at the support levels. And obviously you can see the importance of 59.14. If we come back to test, it'll be key for that to hold. That is very significant. But we did spend an inordinate amount of time on Monday addressing how we come up with these levels on a day-to-day, because as I mentioned before, the bias chart, support and resistance chart is set up for levels for the next 24 hours from this morning on out to 24 hours as far as key levels. Once again, it doesn't mean we hit the high then the low on that, although in the euro, the support today was 836 support. The low today so far has been 831, but it's a level that we expect to see some action at that point where the market, let's say on the support, we see bids start to step in. Once again, low on the day was 831. Here's the 836. So essentially, that's the way you want to go and use that, incorporate it into your own analysis. But they're very short-term levels that are good for the next 24 hours. Let's go on and move into the dollar CAD. So the dollar CAD saw follow through after the bearish engulfing candle on Monday. We talked about this. Here's Friday, here's Monday. Look at that bearish engulfing, which would suggest we'd see further movement. Further movement is just what we saw. The pair almost reached key support at 39.27. Support for Wednesday will be 38.87 in case we see further follow through, with resistance at 40.81. Well, the high today so far has been 40.83. You see, not bad, off two pips. But once again, you just, like I said, it's just if we were to break lower, that's where they see the key support coming in, which would be 38.87. Resistance, as I mentioned, is 40.81, followed by 41.37. High today, as I mentioned, here has been, well, actually right there at 40.81. So like I said, hit it there at a pip. Let's go mark this off. Still bullish. If we were to get past there, we are saying that 41.37 if we were going beyond there. But for right now, you can see where that comes in, and we're coming right across these levels. You see that? That's what came up with that 40.81. And so far, the market has respected that level. Not so much my analysis, just that level, which my analysis is just simply derived off of those levels. That's all I'm doing. On the support, if we do break even lower, we're looking at 38.87. Onto the peso. Well, the dollar peso triggered downside stops, finding bids ahead of 23.78. Support going forward will be 23.60 with resistance at 24.60. Well, you can see there's that 24.60. That's that key level. And look, we've even jumped beyond that. But that's going to be the resistance. The fact that we're above it. We're actually at 24.70, but you can see the wild moves that we've seen here with dollar peso. We've been able to look. Obviously, there was a bearish setup, on Monday, and certainly we saw follow through on Tuesday, triggering beyond 24, and just find it just above 23.78 before we bounce back as the dollar has reasserted itself. But at least for now, once again, you use it as a where you expect. In this case, offers to come in, which would be the 24.60. We have gone above that at 24.70, but that's going to remain our key level for today, 24.60. And support, well, because this is pushing higher, support's going to be right there. You see that? That will be key whether we trigger even lower, and that's going to be 24.21. Let's now go and move into the dollar yen. So the dollar yen had a mild pullback on Tuesday while remaining bid above 850. You can see here, and we're still doing that here. See, we're defending that 850. Support on Wednesday will be at 809. Should we go and break a little bit lower, which certainly would be out of the question here. I mean, we can dip back in here, and we're looking potentially for 809 with resistance at 927 to pivot. So a little bit wider range today. Let's move into the cash dollar index. The dollar index paired back on Tuesday, but managed to hold the 100 area. Resistance will be par 50, and you can see here, there's the par 50 right there, and the high today so far has been par 44. So resistance will be par 50 with support if we receive further fall through at 99.35. So par 50 on the upside. So far high today is par 44. 99.35 if we saw further downside. Doesn't appear to be the case for today. Let's go move into the cross rates. Well, we did see a bit of a gravestone doji yesterday here, although just like a lot of the other pairs, we're trading in a very quiet session. Look, we had a strong move on Monday, further follow through on Tuesday, although the market paired back a bit, and we're trading very, very quiet today. Very quiet. Just same thing. It's almost like similar to what cable's doing too. It doesn't have to be just across rates. We're seeing the same thing in cable today. We're also seeing the Aussie dollar pair back in a bit after its stalwart gains of the last 2 days. Resistance, we'll look for, you see right there at this height, we're going to look for confluence. So here's the close and open here. Here's the high, and almost here at this open and close. So we'll call it 65.21 on the upside. Downside, little pause would not be out of the question. Can we see some confluence? Yeah, you see this high here. Confluence is with that low there. You see that? And close to this close here, open here. So right there, coming all the way across, 64.21. Maybe we'll see a little bit of give back. Let's go and move on to the Euro Yen. Once again, 2 good solid days, although we did pair back from the highs of yesterday. Market trading very tight range. Let's look for confluence. You see here, close, close. Here's a close here. So we try and not mix it up, but try and find some median ground between these key days levels. So we'll push it all the way up to here. Okay, that confluence is with this move here. Seeing pretty good confluence. Actually, that is the high so far today, 1856, and that's where we have it for 1856. We'll stick with that because that's also comes in across here. So we'll stick with 1856, which is actually the high for today. 52 was our resistance from yesterday. Did get past that. Support today, well, maybe see a little bit of a give back. Let's see what we can find. You see the high right here, comes in right there. And that also works with this low here. And as far as giving back, yeah, let's go on and go with that if the market wants to push back a little bit lower here. And so that's going to come in at 1771. Let's go move into the Euro odd. Boy, this has been such a wide range. I think we have to move into the 2-hour chart to get a little bit better handle on this. You see right here, this high confluence is with this low. You see that? And although this is a little bit lower, but how far can the market move down here? It doesn't mean it's necessarily going to do it today, but you can see here almost with this low and this low right here coming across, and then this high here. You see all the confluence coming in? This is where I think the market can get to, not necessarily today, maybe not be till tomorrow or Friday, 76.36. But I think the market could end up gravitating towards that level. Resistance. Well, we're into a little bit of zone here. This is a good level, and that is a high for today so far, 77.09. I'd like to give it a little bit more room, so at least you know what you're looking at, which is right across these bars. You see that? And that's going to come in at 77.26. Let's go move into the Euro Kiwi. Actually, we're just going to take it from here on the 2-hour chart. Let's just go with this high for Monday, which isn't that far from, well, it's not the high for Monday. It's actually, this is a 2-hour chart. Yeah, let's go right there, the closing bar there, which is going to be 82.80. Might be a little bit on the high side, but support, you can see the touches coming across here. You see that coming all the way across here. So support is going to be 81.96. Pretty close, just a hair bit under the low so far. 81.96. With that, let's go and quickly move into the Aussie yen. Well, we are defending this key weekly level that we were able to jump ahead. And we did make it up here. We even got beyond here. This is going to be the level for resistance. I don't know if it's going to turn around and come back up to this level, but that would be 67.45, which is what we had yesterday. And support, looking for the touches, and just a dip below the weekly level is going to come in at 65.98. And we already had that. So that's going to match up there. 67, actual number is 43. We'll just edge that a couple of pips. And let's go move into the guppy. Still trading in a very tight range today. We're going to stick with the 34.53 on the upside, and on the downside, we're going to keep the same here from yesterday, 33.77. Let's go move into the starting odd. And you can see rather well defined right here. You can see all the touches coming across this whole range right there. And that's actually where the high is for today for the most part, right there. So it's going to be 21 or 0109, which is pretty close to what we had. We had 01012, so we'll just move it down just a hair. Not that that's going to make that much of a difference, but we will match it up. And support, we had 99.32. The low had actually come as low as 98.69. Actually, even lower, a little bit, 98.62. Support is actually going to be these touches coming down here if we break lower, which is going to be 98.33. And that takes care of the sterling odd. So we've been able to go in and go through this rather quickly. We are seeing the S&Ps push to their lows, so let's go on and take a look here, move on to back to the S&Ps, to the indices. You can see here we're pushing back lower. We've seen pretty good wide ranges. You can see here at the beginning of the show, we started right up here, right around what, 26.53. We've already dropped off 20 handles, which really in this range isn't even that much. When you pair this back, you can see quite the moves we've had though. Look at this, all up and down, really as high as 26.80. If you think about this, we're 50 handles off of the highs that were at around midnight here, for midnight here, but we've seen quite a bit of ranges here. I think people thought we might have even extended further, so it's really put the market under some pressure. We're dipping back. Personally, like I said, I'm kind of waiting until the U.S. session before I do the trades, because one of the things, just like I saw like in Asia on Sunday, the market pushed higher and then kept pushing higher. And then once it hit the U.S. session, I got, squeezed out of my position. So at least yesterday, and I'm going to do the same thing today, despite, I hate to miss some opportunities, but rather come in the U.S. session, because then I know what I'm playing up against within that session, as opposed to, like I said, the earlier session with this market swinging back and forth and maybe stretching some levels where maybe you're not even that far away from a limit move. So although this was a pretty good level that we moved up in here, I wasn't up at this time, but certainly would have been worth taking a look at, because you can see here that confluence with this level right here. You see that? Look at that. That was a good level right there. You see? And that was a pretty good stretch here on NASDAQ also. So that presented a pretty good opportunity. But I wasn't up at that time. I'm not going to be up. Although Sunday night I was, but I'm not going to be up at the time when we're right at midnight, my local time, which would have been right here. Actually, it's just about 1 a.m. Eastern. 1 a.m. Central Standard Time, which would have been closer to 2 a.m. Eastern. But once again, I wasn't looking to try and step and do anything at that time, so that's fine. Crude oil is on its lows. We'll take a quick look at that. Obviously, a lot of consternation with these cuts and whether or not I have even seen Iran, the Iranian oil minister even said the U.S. needs to join in. And we saw from the story they're saying, hey, we don't need to join in. We're already seeing the market already causing those cuts. But obviously this consternation is weighing here on crude, and that's certainly pulling or weighing on equities. But that's all that we have for today. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room. Thank you.